That's what we would normally expect. But I want to see the blue line, which is the 2s, 10s. I want to see the blue line getting absorbed by bonds. You may not understand what I mean by that. So let me explain very, very briefly for bond traders what I mean by this. It's a negative correlation. So that's the first thing you've got to try and make sure you understand. It's a negative correlation. So for example, if I see the blue line doing this, and the blue line is the 2s, 10s. If I see the blue line doing that, I want to see something like this. I want to see the bond price doing this. You see what you're seeing? You see what I'm starting to show you? I want to see somebody doing that bit of business against the 2s, 10s here. The price should be down here, and the buyers are coming in here. Why is that working for us? Because this is now being sold because of a curve. Because this is being sold because of a curve, not because of bonds being bearish, but on the contrary, bonds being bullish. So when this is getting sold because of a curve trade narrative, so this is curve selling at the back end of the curve, right? This is curve selling. So because that's curve selling, bonds are bullish. I said that doesn't make any sense. It does make perfect sense if you just drew the simple logic behind this storyline. But the bonds are bullish. So when that selling comes in because of the curve trade, and the curve we're talking about, of course, is the FOB and the knob spread. So the FOB and the knob spread that are all developing because of the short-term interest rates expected movement. The biggest curve trade is the knob spread, of course. So when we start to recognize the short-term interest rates trying to do a bit of business for us here, we can start seeing that there's going to be curve selling coming in. That's going to be our buying opportunity. Now, if the bond is dropping as much as the curve is moving, it's not a buy because nobody's doing it. Do you understand? In other words, if the bond price, for example, was down here, if the bond price, for example, was down at the very, very bottom edge, in fact, probably possibly even taken out the bottom edge, that's telling me that the buying hasn't yet started and we might be able to go even further on this bit of business. Does that make sense, Sam? So when it doesn't go further, it tells us that this bond is now being accumulated by directional bettors rather than curve traders. So that's great news, right? So that's great news. So what are we going to be looking for? We're going to be looking for that trade showing up. We're going to be looking for that absorption print showing up. So what I'm looking at is the blue line. So I can see into the blue line up here. I can see that the blue line is an equal to high. And if I look at the bond price, this big absorption here, the bond price is nowhere near the low print. That means the directional bettors are absorbing the selling. You see that? The directional bettors are absorbing in this area here. So this is absorption. So this is the absorption that's taking place in this little space here. Now, obviously, why would somebody be selling bonds? Well, of course, why do you sell bonds? You sell bonds because you think there's going to be what kind of market? Well, you sell bonds because you think there's going to be a steepening back end of the curve. So you start to work into this as a storyline. You start to say, okay, what would cause that to take place? Well, let's take a look at this narrative first of all. Let's go back a step first. One of the things we can recognize is that the black line is heavily discounted in this area here against a blue line that's rising. Against a blue line that's rising in this environment here, you can start to look for that and say, right, what's going on? Well, the first thing that I can recognize almost straight away is that the blue line was falling, but the bond price wasn't. So my first thought is that there is a big sell coming up on bonds. That's the first thought I see in that situation. There's a big sell because somebody's doing it. So in other words, my thought is that this trade here is part of a curve trade. This is the C period, the curve trade. So this one here is the curve. This is the C trade. Okay? So that's the curve trade right there. So that's what I'm thinking is happening, is that the curve trade is now getting absorbed by directional sellers of treasuries. So when we see that there, we start to think about, if that's the curve trade, this must be the curve trade as well here, surely, because the blue line is making a touch into the highs, the price is nowhere near it, so this must be the curve trade here. The curve trade is the sell here. That's the curve. This is what we're wanting to find. We want to find the curve trade. We want to find that bit of business. We want to find where that's taking place. And obviously we want to do it for a very, very simple reason. It's a brilliant trade. It really is a brilliant trade because it's going in the wrong direction to what the curve trade is doing. And it has to go in the wrong direction because that's how the curve works. The curve isn't just about buying one. It's about buying a market and selling a market simultaneously. That's how you get a curve trade on, which drives the bond price artificially higher against a very good sell trade. So when we see it, we can start figuring this out. The basic rule of thumb is that if the black line is below the blue line, bond prices should be going up. When the black line goes below the blue line and the blue line starts getting jammed against the black line, you can see that the curve is probably going to start driving back up again. So when we got blue below the black, when we got black line below the blue line makes a higher high here initially. Here you see that there. Well, guess what happened to the bond? Guess what happened to the bond? Look at what happened to the bond, guys. Does everybody see the CT line? The CT line must be this. The CT line must be this. That's the CT in the buy trade in the overnight session, right? That's the CT part. That's the curve trade. There we go, new line attached to that. So there it is. There's the curve trade right there. It's beautiful, isn't it? So that gave you a really strong suggestion that this is now the trade that you want to be on. This is now the buy trade. It's going to rip from that price all the way up. Same thing happened in here. Same thing happened up at the top edge up here. And you can see the drop off of that was beautiful into the exact same thing. Now you might be saying to me, but that doesn't tie in beautifully with the top edge, does it? Yeah, but look at the blue line, black line narrative. The blue line is massively premiumed against the black line. Blue line is massively premiumed to get to the black line now. And the only reason I did end up selling into it was because we hit the 16s. That's why I wanted the 16 price, because I wanted to take the price up through that liquidity. Remember, we told you at 12s, we're going to try and get it through 16s. That's why, because we were not getting the perfect absorption print just yet. It wasn't showing quite right. But you can see that this bond is now very, very obviously, the twist in this is huge. When the twist is this big, of course, the idea is to try and sell any uptick that we can possibly get our grubby mitts on. Does everybody agree with that? You might be saying, but why would we want to sell the uptick? Well, let's think about it. If I sell the black line, what am I selling? I'm selling the ZF, right? If I sell the black line, I'm selling the ZF. If I buy the blue line, what am I buying? ZT, right? So if I do that trade, I'm selling ZF and I'm buying ZT. So if I'm buying ZT, selling ZF, what's happening to the shape of the curve? So we can start to recognize the movement of price. Remember, we're not talking about yields, we're talking about prices here. So we can already recognize that that is bearish net bond. That's a bearish net bond position. ZT going higher, ZF going lower. We can already start to recognize that idea. We can already recognize that that is called a short-term interest rate steepener. Okay? So if you just think about what that is, it's a short-term interest rate stirs steepener. Well, if we've got a stir steepener coming on, what direction are interest rates going? Well, of course, interest rates must be going higher now, aren't they? So this tells us that the outcome from this is higher rates. If it's higher rates, what does that do to bond prices? Short bonds. The loop is completed by going through that process, isn't it? So we can see that when the black line goes above the blue line, it tells us that we are now moving into an environment whereby we should be able to make money by selling high-priced bonds. Now, the challenge, of course, is that if this line is still falling, this should still be rising. And that's where the challenge is just now, because we're not seeing initially we weren't seeing the big absorption at the higher prices. Now you can see that there's a big absorption in the net positioning of this. The blue line is now way beyond where we needed to be here, way beyond. And you can see the bond price is way below this. So there is going to be an opportunity for us to sell treasuries into these upticks. And I'm just going to be starting to watch that. So I'm going on offer watch on bonds now. I'm going to hunt for that bit of business and see if it stacks up, see if it starts to show up. Now, one of the challenges, of course, was the oil. Of course, we've got that on our screens. We're aware of that challenge taking place. The other challenge, of course, has been obviously for that reason, has been the inflation break-evens. The dollar yen looks brilliant. It looks like it's the right trade. It looks like it's the trade we're going to make the monies on. So obviously that's the trade we're going to be doing. That's the one we're looking for, guys. Sell side on the uptick on bonds. Let's see if we can get the curve traders finally getting jammed on a bit of business. And then if we can get the curve traders jammed on a bit of business, we could be in pretty good shape on a pullback. Obviously, it'd be perfect if it went all the way back up to 16s. I don't know if that's going to happen, though. I don't think that's got enough in it to take us up to 16s, guys. I don't think it's got... it's not got the oomph, but we've got break-evens on a pop just now to the upside or downside, so bullish bonds, of course. And that's why I'm a little bit patient, a little bit more cautious with this trade, but certainly sell-side bonds for me. On offer watch. Let's see if we can find an opportunity.